Restoration Hardware. How about this one? You want to get kicked in the teeth, just be Restoration Hardware. Not only did they miss in Q4, but they missed in some pretty big ways. However, it's interesting, Mark. I'm looking at it and it's like, I always like to look at, well, what really happened? I really don't care where some of these analysts were looking. I want to know what happened. Well, when you look at it, revenue was actually up 18% for Restoration Hardware, 18%. Now they missed, but they had a pretty nice lift off of that. I also look at the earnings themselves, $1.58. They were actually looking for 191. That's a miss. That's an ugly miss. And that's, I think, what people were looking at. On top of the fact that we say it every time somebody has earnings, what's the guidance? What are you looking for? Their guidance was awful. They talked about this being one of the worst years for them in 50 years of real estate. That's a big issue as well. I tell you what, here's one thing that people should have known going into this. We're in a market that's a little jittery anyway, right? I mean, clearly. I mean, the moves we've had is incredible. Well, when I look at the PE of Restoration Hardware, and I'm not looking at the forward, I'm looking at what their PE coming in trailing was. It's anywhere between 50 and 60, something like that, Mark. I mean, it's that's awfully high. And I think people should have known that going in, and the fact that they got some cuts in the price target cut from Citi. There's just a heck of a lot of news out there, and none of it is good.
No, I mean, and look, if you're looking for a reason why this thing's getting slammed as hard as it is on what is actually not the worst guidance. If a CEO told me, hey, we're going to grow revenue this year by 13%, I wouldn't exactly make that a reason to take him out, but, back of the barn and shoot him. That's revenue growth. It's not the worst thing in the world. But when you've got a PE that makes this thing look like it's trading like a data center or a quantum computing company, I'm obviously exaggerating a little bit there, it does make sense that it's going to get sold off that much, and citing, of course, the worst, forget tariffs, I think the bigger issue here, worst housing market in years. Companies like this rely on two things: new homes and even existing home turnover. That's when you buy furniture. If nothing's moving around, then they ain't selling.